Right now, a surge of state-level lawsuits and sudden corporate bankruptcies is sweeping through the residential solar industry. State attorneys general are launching aggressive enforcement actions, targeting the largest players for deceptive consumer practices. From Texas to Connecticut, investigators have uncovered identical patterns: forged consumer signatures, unpermitted electrical work, and solar systems that simply do not function. This legal pressure caused former industry leaders like Pink Energy, Titan Solar, and Lumio to file for Chapter 7 or Chapter 11 bankruptcy almost overnight. These bankruptcies represent the total breakdown of a business model built entirely on deceptive marketing. The fallout has reached hundreds of thousands of homeowners who are now left with unpermitted roof damage, dangerous electrical setups, and voided warranties. The physical equipment is only the start. The real burden is the ongoing financial liability. Even after an installer shuts its doors, homeowners see hundreds of dollars auto-drafted from their bank accounts every single month. It creates a bizarre legal paradox. A homeowner is legally forced to pay on a 25-year contract for a broken solar system, even when the company that installed it no longer exists. Homeowners are trapped in this limbo because they misunderstood a crucial fact. They didn't actually sign a contract with the person standing on their front porch. Residential solar sales function through a coordinated trap between two entirely separate entities working in concert. On one side is the installer. They deploy aggressive door-to-door salespeople to promise total utility bill elimination, and in many documented cases, they simply forge the final paperwork. The most devastating pitch is the promise of a direct 30% government check to cover the loan. In reality, this is a non-refundable tax credit. If a homeowner doesn't have a high enough tax liability, they receive no benefit at all. On the side is the lender, a group of just 5 financial institutions, Goodleap, Mosaic, Sunlight, Sunnova, and Dividend, secretly controls 80% of the residential solar debt market. This two-part structure is intentional. It separates the false promises made on your porch from the legally binding financial debt hidden deep in the paperwork. This chart shows how the debt is structured. Lenders secretly bake exorbitant dealer fees directly into the loan principal, creating a 30% markup on top of the actual hardware cost. By artificially inflating the principal, lenders can offer supposedly low interest rates, like 1.99%, which trick consumers into believing the system is affordable. The trap springs the moment the installer files for bankruptcy or stops answering the phone. The homeowner is left with non-functioning hardware, while the lender continues to pull the monthly autodraft. When victims complain, the lender points to the fine print. They claim they only provided the financing and hold no responsibility for the installer's broken promises or faulty equipment. This artificial legal wall turns a failed home improvement project into a permanent financial trap. In 1976, the federal government created a mechanism specifically designed to dismantle this exact loophole, the FTC Holder Rule. The rule's core logic is absolute. It mandates that whoever holds the loan is legally liable for any fraud, misrepresentation, or breach of contract committed by the original seller. Federal watchdogs, including the Consumer Financial Protection Bureau, have made it clear that lenders cannot distance themselves from the specific transactions they financed. For a homeowner, the consequence of this rule is significant. If your installer goes bankrupt or your system severely underperforms, it actually triggers contract voidability clauses against the lender. You are not legally obligated to pay a lender for the next 25 years if the original product was sold to you through deception. Taking on the country's largest financial firms is not a DIY project. It requires specialized consumer protection attorneys who know exactly how to weaponize the Holder Rule. That is why Elite Solar Recovery exists. They are a dedicated legal force built specifically to tear down the wall between fraudulent solar installers and their lenders. This data shows the effectiveness of their strategy. Because of their strict case screening process, Elite Solar Recovery maintains a 70+% success rate in securing complete contract cancellations or substantial loan reductions for their clients. They also structure their representation to avoid putting more financial strain on victims, offering flat fee retainers and accessible financing options for as low as $200 a month. Stop paying for broken promises. If you are trapped in a deceptive solar contract, reach out to Elite Solar Recovery today and secure your free case review.